Hey everyone, welcome to our channel, The Curious Indian, and in a world where the economy is constantly changing, it's crucial to stay informed. Join us as we navigate the world of finance, breaking down the big stories and bringing you the knowledge you need to make informed decisions. What is repo rate? You see, the repo rate is like the central bank's secret weapon. It's the magic wand that helps control the flow of money in our economy, making sure that everything runs smoothly and that there are enough funds for everyone. But what happens when there's a shortage of funds, you ask? Well, that's where the RBI comes in with their trusty repo rate. It's like the central bank is playing the role of the fairy godmother, granting loans to commercial banks to make sure they don't run out of funds. Now you might be thinking, why do commercial banks need loans in the first place? Well, imagine that you're a small business owner, Mr. Sharma, and you're having a busy day. You've had orders coming in left and right, but you're running low on cash. That's where your friendly neighborhood bank comes in. With the help of the repo rate, the bank can lend you some money so you can keep your business running and satisfying your customers. But here's the catch, just like with any loan, there's interest involved. And that's where the repo rate comes in. The higher the repo rate, the higher the interest on the loans. So when the RBI decides to increase the repo rate, it makes borrowing more expensive for commercial banks, which in turn affects the overall level of economic activity. The repo rate is like a guardian angel for our economy, keeping it in check and making sure that everything runs smoothly. So, the next time you hear about the repo rate, remember that it's not just some boring monetary policy, it's the RBI way of making sure that there's enough funds for everyone, from small business owners to young couples looking to buy their first home. How does it affect people? Think of it like this, the repo rate is like the gas pedal of the economy. The higher the repo rate, the more expensive it is for people to borrow money for things like homes, cars, education, and more. It's like driving a car, the more you step on the gas pedal, the more expensive the fuel becomes. Example of different sectors. Let's take a closer look at how this affects different sectors. Housing sector. If the repo rate goes up, the cost of borrowing for a home loan also goes up. So, instead of living in a mansion, Mr. Humor might have to settle for a smaller house. Automobile sector. Same goes for the automobile sector. The repo rate increase can make buying a car a more expensive affair. Mr. Humor might have to upgrade his scooter instead. How many times did it increase in the past year? The RBI reviews its monetary policy regularly and announces any changes to the repo rate. In the past year, the RBI has increased the repo rate a few times to control inflation and maintain price stability in the economy. Actually, Reserve Bank of India, RBI, recently hiked the repo rate by 25 BPS, the sixth such increase in 2022. The repo rate currently stands at 6.5%. The first time RBI hiked the repo rate was in May when the central bank's rate-setting panel unanimously hiked the benchmark lending rate by 40 BPS. This was followed by an increase of 50 BPS each in June, August, and September. In total, the RBI has hiked the rate by 190 BPS. Here are a few repo rate hikes in the past. Why is the government increasing the repo rate? Ladies and gentlemen, have you ever heard the phrase, too much of a good thing is bad? Well, that's exactly what's happening in our economy. With everyone borrowing and spending, prices are starting to rise, and that's not good news for our wallets. So, what's the solution? The Reserve Bank of India, the guardian of our economy, has come up with a brilliant plan. They're increasing the repo rate. Think of it as the RBI way of saying, slow down, guys. By increasing the repo rate, the RBI is trying to curb excessive borrowing and keep inflation under control. This way, prices don't get too high and our money stays valuable. It's like hitting the brakes on a speeding car to make sure it doesn't crash. So to conclude, the repo rate is like a double-edged sword. On one hand, it helps control inflation, but on the other hand, it makes borrowing more expensive. But at the end of the day, it's up to the people to decide whether the increase in repo rate is good or bad for them. And that's a wrap for this video on the repo rate. I hope you found it informative, engaging, and maybe even a little bit funny. Don't forget to like and subscribe for more videos on finance and the economy. Thanks for watching.